Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only. Hey everyone, I hope you're having a great Friday morning. So we've got a little bit of stability here. We have talked a little bit about how volatility is starting to compress, even though stocks are continuing to exhibit a little bit of weakness. And I think that's a very positive sign. We've seen fixed strike vol. That means those out of the money puts in particular coming down, the implied vol coming down on those, meaning people are not as panicky. If market makers were extremely panicky, that would not be happening. So there's this willingness, I think, for protection holders to sell out that protection. That's starting to compress vol, and the market makers are all too happy to kind of absorb that supply. So pretty positive signs. You can see the VIX here starting to break down a little bit. I think if we get to 18, 19, I think it starts to look interesting from the long side again. But one thing in particular looks interesting, the VVIX, which is the volatility of volatility. Look how it hit the exact levels that we saw in December in that sell-off and has pulled back significantly since. And we saw that start to break down. It's kind of leading the VIX down. I think that's actually quite a positive sign as well for stability. And I've been talking about in my videos how the CTA selling has been drying up a little bit. Hey everyone, if you haven't subscribed to the channel, please do, and be sure to download my free Options Cash Flow Blueprint, a step-by-step guide for how to go from complete beginner to Options Ninja. Now back to the video. Vol targeting. A lot of these strategies are starting to get a little bit short the market, and in particular, I wanted to talk about Meta because I think Mag 7 is starting to look kind of interesting for a trade. We've been seeing maybe a slight bit of stability in growth again. We saw growth really get slammed. People moved into value for some time. And we're starting to see that come back. And I have mentioned that in videos that, listen, I think that's a place to hide, right? Strong companies, incredible balance sheets, pretty, not totally predictable revenue, but these guys have accounted for a great deal of S&P revenue. I don't think that changes anytime soon. Sure, some of them are a little bit cyclical and can be affected by what's going on out there, but they are definitely strong companies in the right places, right? In AI, in digital transformation. So we can see this overall volatility compressing here. Look at in the VIX, upside call skew pushing down. But guess what hasn't really pressed down very much? Single names. So we've seen a broader compression of vol, whereas individual names has still remained a little bit high. So I think that could actually act as a little bit of a Vana push as those out of the money puts that people are really holding on to because they're worried about that downside. As that starts to potentially get compressed, market makers who are short stock against those short puts, that starts to come in as those deltas drop. They cannot be as short stock, so it starts to unwind to the upside. So that Vanna effect can have a little bit of an impact on a potential bounce in those names. So I put that out in the community this morning. I said, listen, that looks interesting. So I got into a Meta upside broken wing fly. Look at this. We see particularly from dealer gamma, but also from levered ETFs, right? So we talked about how levered ETFs, leverage ETFs, and inverse ETFs will push in the direction of movement. So when markets are selling off hard, there's a lot of supply of stock coming from particularly those higher beta names where those products tend to be more concentrated. But that can work the other way too, right? That's a two-edged sword. It can actually help to the upside. And if we look at certain things like look at NVIDIA, short gamma on the way up, sure enough, NVIDIA's bounced from 105 to 118, 119 today. And I think the upside pain point could be, or the pain point could be to the upside at this point. People have really de-risked in the area of growth. And we can see that to the upside on 3, 5, 10, 15% moves, look at all the different names in these big growthy companies, Mag 7 type companies, Mag 8, I guess if you include AVGO, there is some buying pressure there. So I want to play that. I want to play this compression, this Vanna effect, this perhaps oversold status for some of the growthier type names out there. And I want to play that. So what I did was I got in there and I did a broken wing butterfly. So when vols are really high, you want to use butterflies a lot of the time to kind of express an expression of upside or downside. To the upside, it kind of works quite well because you get the benefit of that short Vega. So what I did was I got in here, bought the 620 in April, right? I don't want to go out too far. I want a little bit of gamma, right? If you go out too far on these things, you're going to get some delta, but it's not going to be you're not going to get the reaction you want, and you definitely want to make money on this. So you want to position yourself, not in tomorrow, but you want to give yourself not too much time. So I've positioned myself out to April, the April 4th expiry. So let's say about 20, what is that, about 20 days. And yeah, that's about, let's say 3 weeks. And so I bought the 620, you sell 20, the 10 of the 620s, sell 20 of the 660s, and buy 10 of the 710s to cap that upside in case things really, really start to go. So you can see there's a little bit of a cost to that. I got in at $7, actually 775 marking right there. I think I paid 702 or something like that. And so you get this nice push. And what can also happen is watch what happens towards the belly. So if we get up towards, say, 664, look what happens. We're short a lot of Vega. This is one of the benefits to this kind of strategy. You get this push down in volatility, which hopefully happens, right? We see the VIX come down towards 20. We see some of the high vols in some of these mega cap names come down as well. You're going to get the benefit of that. So what's the benefit here in this kind of environment? Well, you're not just buying some calls, which are going to get hurt from an implied volatility standpoint. You're probably still going to make money on depending on which ones you buy, but you're going to be pushing that volatility boulder up a hill because vol is going to compress. Call spread could be really good too. You're going to get some really nice delta. This is a nice way to express it though. You get the delta, you get that nice short Vega exposure right around where you think it's going to get to, right? So if you think it's going to go from 600 to maybe up towards that 670 level, you can pick a spot on the chart where you think, okay, that's pretty reasonable. If we sort of look here, if we get up into here, that would retrace about 50% of this move here. If we got into sort of the 670, 680 region. Plus, this isn't going to show the full effect. You've got to vol shock it. So you're going to bring this down however many points. If you look at the implied volatility on Meta, trading super high, right? So if we get a move back down, a reasonable move back down in implied volatility, you're going to get that that Vega effect, and we have the larger structural benefit of Vana perhaps at this point. So we need this market to continue to stabilize. We need money to keep pushing into Meta, but this is a position that plays the upside. It plays delta. It plays Vega. And it does it in a limited risk way. So if we do fall out of bet again, well, you're just risking the debit paid for this sort of spread. So these are the kinds of things that we're looking at in the community, kinds of things that I think make a little bit more sense. I've been taking off some hedges that are very similar in structure to the downside. And I think if we do sort of pop up a little bit more, we get maybe 150 point rally in the S&P, which I'm hoping for, because things have gotten rather negative in the short term. You can watch one of my earlier videos which talked about the different lights, right? Light at the end of the tunnel from a technical standpoint, we were really oversold, but the light at the end of the tunnel is an oncoming freight train from a fundamental standpoint. Things are really not great out there unless things really change in terms of those major themes that we're seeing in tariffs and growth scares and things like that. Companies starting to warn things are not great. But if we get that nice sort of bearish rally, I think at this point, then we can start to look at some of those downside structures again, and different kinds of things that can act as hedges. So we've been adding to our Leaps portfolio. We've been adding to some other areas. So having lots of fun, and stay safe out there. We'll see you guys in the next video.